Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called MACD Acceleration Impulse. Most traders know the MACD for its classic line and signal crossover, but this strategy takes a very different angle. Instead of waiting for that lagging crossover, it reads the acceleration of the MACD line itself, the bar-to-bar change in momentum, to spot when a move is just starting to build. In the next few minutes, we'll break down how it works, walk through the actual code, and trace a full long and short example on a chart. This is educational content only, so let's dive in. Let's start with the big picture. MACD Acceleration Impulse is a momentum strategy built on the second-order behavior of the MACD line. The MACD line is simply a fast-moving average minus a slow-moving average, and in this build the defaults are a 12-period fast EMA and a 26-period slow EMA. A normal MACD signal fires when that line crosses its own average, but by then, the burst of momentum that caused the move is often already spent. This strategy instead measures acceleration, defined as the current MACD value minus the previous one. Acceleration turns positive the moment momentum begins building, so it's an earlier read on a move getting underway. The challenge with raw acceleration is scale. On foreign exchange pairs, metals, and indices, these numbers are tiny and completely instrument-specific, so a fixed threshold would be useless. The strategy solves this with a fully self-scaling gate. First, it builds a noise band from the standard deviation of recent acceleration values over a chosen window, multiplied by a band factor. The current acceleration must burst outside that band to count. Second, it applies a dead zone floor tied to the average true range, so a flat, quiet market with a near-zero band can't accidentally produce a signal. A valid impulse has to clear both thresholds at once. On top of that, a trend EMA, defaulting to 100 periods, keeps entries on the correct side of the larger move, and the sign of the MACD line confirms momentum is already leaning the trade's way. Risk is handled entirely through the average true range, with the stop and target both scaled from current volatility. This approach may appeal to traders who like rules-based, momentum-driven systems and want to study how a classic indicator can be reworked in a more adaptive way. As always, trading involves risk, and losses are a normal part of any approach. Now let's walk through the exact logic, step by step. The expert advisor acts once per freshly closed bar, so it isn't reacting to every tick. On each new bar, it first calculates the MACD line as the fast EMA minus the slow EMA. It then measures acceleration as the current MACD value minus the value on the previous bar. That single number is the heart of the whole system. Next, the strategy figures out how large that acceleration needs to be to matter. It looks back over the band length window, 20 bars by default, and computes the standard deviation of the acceleration values in that window. Multiplying by the band factor, 2 by default, gives a dynamic release level. Think of it as the recent noise threshold. On top of that, it calculates a dead zone by multiplying the average true range by the dead factor, which defaults to 1500ths. This dead zone is an absolute floor that prevents signals on a dead flat, low volatility tape. For a long entry, for conditions must all be true at the same time. The MACD line must be above zero, confirming momentum already leans upward. The current acceleration must exceed the noise band. It must also exceed the dead zone floor. And the closing price must be above the trend EMA, keeping the trade aligned with the larger move. When all four line up, the strategy signals a buy. The short side is a perfect mirror. The MACD line must be below zero. The acceleration must burst downward past the negative band and past the negative dead zone floor. And the close must be below the trend EMA. When those align, the strategy signals a sell. Risk management is volatility-based. On a long, the stop loss sits below entry by the stop multiplier times ATR, defaulting to 2 times ATR, while the take profit sits above entry by the target multiplier times ATR, defaulting to 3 times ATR. That's a 3-to-2 reward-to-risk shape. The short side mirrors this exactly. The EA holds only one position per magic number, and it never stacks trades. If an opposite impulse appears while a trade is open, the strategy closes the current position, so the book always reflects the freshest reading. A spread filter also skips entries when the spread is wider than the allowed maximum, keeping fills realistic. Let's read through the MQL5 code as it appears in MetaEditor. At the top are the input parameters. Fast EMA and slow EMA define the MACD line, defaulting to 12 and 26. Trend period is the trend EMA at 100. Band length and band multiple control the self-scaling noise band. ATR period, AtrDeadFactor, AtrSlMult, and AtrTpMult govern volatility, the dead zone floor, and the stop and target distances. Just below, you can see acceleration computed as the current MACD value minus the previous one, along with the band from the standard deviation and the dead zone from the ATR. Now look at the buy block. The long signal is true only when the MACD line is above 0. The acceleration exceeds the band. The acceleration also exceeds the dead zone floor, and the close is above the trend EMA. When that holds, the code reads the ask price as the entry, sets the stop loss below entry by the stop multiplier times ATR, and sets the take profit above entry by the target multiplier times ATR. Then it calls trade.buy with the lot size and those stop and target levels. The sell block is the exact mirror. The short signal requires the MACD below 0, acceleration below the negative band and below the negative dead zone, and the close below the trend EMA. It then reads the bid as entry, places the stop above entry and the target below entry by the same ATR multiples, and calls trade.sell. Both sides are symmetric and fully driven by volatility. Remember, this is educational information, not financial advice. Let's bring this to life on the chart. On the price panel, you can see the blue trend EMA weaving through the candles, and in the subpanel below, the gold MACD line moving around its dashed zero line. Remember, this strategy doesn't watch for a crossover. It watches how quickly the MACD line is changing, its acceleration, which shows up visually as the steepness of that gold line. Look at the first two candles. Price is drifting sideways, hugging the trend EMA, and down in the subpanel the MACD line is just below 0 and nearly flat. There's very little slope, so acceleration is small. This is exactly the kind of quiet tape where the dead zone floor keeps the strategy patient. Nothing here clears the noise band, so no trade is taken. Now watch the third candle. Price pushes up with a strong green body and closes above the trend EMA. At the same moment, the MACD line lifts through the zero line and its slope steepens sharply. That steepening is the acceleration bursting past both the noise band and the dead zone floor. All four long conditions now agree. The MACD is above 0, acceleration is above the band, it's above the floor, and the close is above the trend EMA. That's where you see the buy entry marker appear. With the trade live, the stop loss is placed below entry at 2 times the ATR, and the take profit sits above at 3 times the ATR, giving that 3-2 reward to risk shape. Follow the next candles. The fourth, fifth, and sixth all print higher. The MACD line keeps climbing, and momentum carries price straight up into the take profit target on the sixth candle. The long idea worked because the entry caught momentum as it was building, not after it had already run. Now the market turns. On the seventh candle, price stalls near its high and closes lower, and the MACD line rolls over from its peak. Notice it's still above 0 here, so no short is allowed yet. The strategy waits for real confirmation. On the 8th candle, price slips back below the trend EMA. Then on the 9th candle, price drops with a firm red body. The close is clearly below the trend EMA, and in the subpanel the MACD line pushes down through 0 with a steep negative slope. That downward acceleration bursts past the negative band and the negative floor while the MACD is below 0. All four short conditions align, and the sell entry marker prints. For this short, the stop loss sits above entry at 2 times ATR, and the take profit sits below at 3 times ATR. Watch the final candles. The 10th and 11th continue lower. The MACD line keeps sinking away from 0, and price reaches the downside take profit target on the last candle. Both trades followed the same rule set, just mirrored. And if an opposite impulse had appeared while either trade was open, the strategy would simply have closed it to stay with the freshest reading. That's the full cycle, a long and a short, driven by acceleration rather than a lagging crossover. So there you have it, a complete walkthrough of MACD acceleration impulse. We covered how it reads the acceleration of the MACD line instead of the usual crossover, how the self-scaling noise band, and the ATR dead zone floor work together to filter out quiet markets, how the trend EMA keeps entries aligned, and how the stop and target are both scaled from volatility. We then traced a long and a short example candle by candle. Remember, everything here is for educational purposes only and is not financial advice. Trading carries real risk, and losses are always possible. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you'd like me to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.